You are watching Market Watch, the brief overview of the key events from the world of finance. Opening the economic calendar, it becomes obvious that this week special attention will be paid to the speech of the head of the Federal Reserve Jerome Powell and the upcoming release of the U.S. employment report, in anticipation of which, the activity of buyers in the stock market has significantly decreased. Also, the volatility of trading in the U.S. dollar remained moderate, thereby confirming the importance of these events. But another important event occurred on Wall Street, distracting the attention of market participants. This is the increase in the value of the largest cryptocurrency, as a result of which its price approached a historical maximum. It is not for nothing that we focus on these events for the second day in a row, because in an obviously bullish market, which is becoming more and more like a bubble, the probability of developing a more powerful corrective decline increases. In just 8 days, of which there was a strong increase for 4 days, the value of Bitcoin increased by about 33%. Since the capitalization of this coin exceeded the $1.33 trillion mark, it grew by about $330 billion in a little more than a week. Just think about it, in just 8 days, the total value of all Bitcoins has increased more than the capitalization of Bank of America. Moreover, the combined value of the 5 largest U.S. banks is already inferior to the market capitalization of Bitcoin. Considering all of the above, it becomes obvious that institutional investors are already using Bitcoin as digital gold. But it is also extremely difficult to argue with the fact that this asset is becoming increasingly dependent on sentiment in the U.S. stock market. Therefore, any hints from the head of the Fed on the readiness to tighten monetary policy may provoke a strong wave of sales. First of all, the key stock indices, but also the cryptocurrency market. This scenario does not imply a global trend change, but it does not exclude the development of a deep corrective decline. If these comments are supported by strong labor market data, then the market reaction may smooth out a little. It is important to take into account that the stability of the American economy supports the U.S. dollar and at the same time stimulates demand for key stock indexes that contribute to the growth of the cryptocurrency market. Investors are already ignoring the fact that the Fed can keep the rate at the current level for a long time. Therefore, only the use of verbal interventions can cool the market. And although this scenario looks like a conspiracy, it can be extremely effective and even beneficial for the economy, slowing down the bias towards the rapid growth of technology companies. This scenario also takes into account the strengthening of the US dollar paired with most currencies, but only in the medium term. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.